Welcome to a stupid simple guide on trading and how to start trading as a beginner. Now I'm going to keep these videos as short as possible for your sake and as much to the point as possible, okay? The last thing you want is me to flood your heads with all the unnecessary information, okay? We will touch into the more in-depth things later on in the videos, okay, where we will touch back on some of the lessons from the start and where we will analyze them in more detail for more information, okay? For today, we're just gonna touch on the bare basics, bare bone basics, because I will assume everyone that has come here is a complete beginner. So, without further ado, let's get started. So, what is trading? Okay, what's all the funny lines? Okay, how can you capitalize on this? How can you make money? So, trading. You have your different assets here in trading. Okay, basically, what you're doing is you're betting for price to move in a certain direction. Okay, you're betting for price to move up or betting for price to move down. That is how you make money in trading. The beautiful thing about trading is you can capitalize where the price moves up or where the price moves down, okay? So you have your different assets here, right? You have the likes of cryptocurrencies like Bitcoin, XRP, Dogecoin, you name it, whatever you want, it's there. Different commodities, okay? So you have metals, you have oils, you have gas, everything, okay? You have different stock exchanges, okay? You have the Nasdaq, okay? You have S&P 500, you have currencies, okay? The likes of the dollar, the yen, the euro, the British pound, okay? So on and so forth. Now, what are all the lines and all the different sticks, let's say, right? Don't mind this. These are candlesticks, okay? And this is a candlestick chart. Okay, why are they called candlesticks? Because they look like candles, okay? What are candlesticks? We'll touch on that in a second. So, we have our charts, okay? We have our candlestick charts and our line charts. And what do they represent? So this, again, all this, candlestick charts or line charts, okay? The charts, in general, represent the way price moves in a certain asset, okay? On a certain period of time. So, the charts, again, represent the way price moves, hence the word price action, okay? On a certain asset. Now, why is that important? It's important because that's how you make money in trading. You make money in trading, okay, by analyzing the way price moves, okay, by finding out what it's doing. And by finding out what it has done and what it's currently doing, you can predict fairly accurately, okay, where it could possibly end up in the future. Okay, that is how you make money. Now, the important thing to take note of, nothing in trading is for certain, okay? There's no such thing as a 100% win rate. There's no such thing as okay, I'm right 100% of the time. Okay, that doesn't exist. Trading is a probability game, okay? But us as traders, what we can do is best analyze the markets to the best of our abilities and stay disciplined, okay, and patient to make the best, most accurate and educated guess on where it's going to end up next, and lower or try your best to lower our risk of losing, okay? Again, it's a probability game. You will not be right 100% of the time, okay? You will lose. Okay, let me say here now first, you will lose, okay? Just be aware of that, okay? Do not come into this thinking I'm going to be right 100% of the time, I'm going to have a 99% win rate, and I'm going to make millions, okay? That's not the way this works. Only by staying disciplined, okay, and structured, right, sticking to your rules, it's the only way you'll become profitable. So, moving on. You have price and price action, okay? Like I just said, all this is like a movie or a book, okay? You read a book chapter by chapter, or you watch a movie, okay? After 2 hours of watching a movie or 20 chapters of reading a book, you could just about make a well-educated guess on what the ending's going to be, okay? Same as this. You will learn by certain information, by analysing the markets in a certain way, And by aligning certain confluences, certain information, okay, once it all aligns, it will tell you a story along the way. And by putting those stories together, by putting all that information together, you could almost predict fairly accurately where the price is going to be next. So, the markets, there's three ways the markets move, okay? It moves up, it moves down, or moves sideways. Another key important thing to know, okay, take note of this, the markets never just move up and move straight down after, okay? That almost never happens, okay? You never move up and then straight away you move down, or vice versa. When you're moving down, you don't just go straight up, okay? You'll go sideways for a period of time. And in these markets, you will range, okay, or consolidate most of the time, okay, than trend. So, when prices are moving up or moving down, okay, that is a trending market, okay, where it's distinctively going up or going down. A ranging market, is when the market's going sideways, okay. The market most of the time spends its time going sideways than it does trending, okay. But do not be mistaken, you can capitalize on both of these, okay. A lot of people will say when the market's going sideways, it's doing nothing, okay. Don't worry, you can make money in all aspects of the markets. So, in a trending market, the market moves up and it moves down, okay? The terms used are bullish and bearish. So the price is moving up, it's a bullish market, okay? Bullish price action, price moving up. Now, how is that represented? It's represented by higher highs and higher lows. Now, we'll move on how to correctly identify and spot a high, okay? And a low, swing highs, swing lows in a later on video. Let's just focus on the main overall structure, okay? Higher highs and higher lows is what gets you bullish price action, okay? Price going up. Bearish price action, okay? Where price is moving down, that will be represented by lower lows and lower highs, okay? Fairly straightforward, fairly simple. Again, when the market's moving sideways, okay, it's not really making any clear and distinctive moves, okay? It's not really going up, it's not really going down, it's kind of going sideways, okay? Between a range, okay? You have a range high and range low, okay? We'll move on how to actually correctly mark out or range highs and lows in later on video. But you're moving sideways within a range, okay? Within like a box, okay? You're not really doing anything. That is when the market's consolidating, okay? It's ranging or it's a neutral market. Now again, a lot of people will tell you, okay, like I just said, the market's not really doing anything. But it actually is doing quite a lot, okay? It is doing something. Like I said, most of the time the market will move sideways. Now why does it do that? Like I said before, it doesn't move up and straight down. It's got a range in between. And now why? Okay, take it as this. The market's got to gather momentum. It's got to gather strength. It's like a battery. It's got to gather strength for the next push. So it'll move up, okay, or it'll move down. And obviously it'll die down, okay? It's like a roller coaster. It'll lose its momentum. It goes sideways for a period of time, okay? It'll gather its momentum in for the next big push up, okay? That's basically how the market works, okay? It moves up, it moves down, slows down, moves sideways for a bit, and then we have another breakout, whether it's to the upside or the downside, okay? So there's your three ways on the markets, okay? How they move. They move up, they move down, or they move sideways, okay? Bullish, bearish, consolidation, ranging, or neutral, okay? Higher highs and higher lows, price moves up. Lower highs, lower lows, price moves down. Now, nothing's perfect in trading. I said a few minutes ago. Nothing is perfect in trading as well. So, you will very rarely get something like this. Very clear moves like this. Most of the time, it'll look something like this. Okay? It'll not always be perfect highs and perfect lows, okay? You'll never get perfect higher highs and higher lows. You get these sweeps, okay? These sweeps of liquidity. Okay, we'll touch on what that is again later on. But you get these sweeps, okay? You'll get these rapid moves down. Sweeping some lows, okay? So it's not perfect. Now this is an area where a lot of beginner traders, they'll panic, okay? They'll get confused. They won't know what's happening because they think, well, we're not supposed to go down that far, okay? They don't understand what this is. So just keep in mind for this video, okay? For the sake of this video, it's not perfect, okay? You will get higher highs and higher lows. You will get lower lows, okay? You get these sweeps where it moves lower. But just know on the overall price action, the overall time frame, okay, on the bigger picture, you're still in an uptrend, okay? You're still moving up. So don't get panicked, don't get bogged down by this, okay? Same in a bearish trend, okay? You have your lower lows, your lower highs. Sometimes this will happen. You have a sweep to the upside, okay? When it makes a higher high all of a sudden. Just know on the bigger time frame, on the bigger picture, you're still in the downtrend, okay? Now we will touch on how to identify these, what these mean, how to find them, okay? How to trade them in a later on video. But just know the markets are not perfect, okay? Very rarely you will get price like this. Most of the time it looks messy, something like this. Now, moving on to our candlesticks, okay? Most of the time, most traders, you will trade on a candlestick chart which would look like so. Except your candlesticks will be red and green, mine are black, okay? My down candles are black, yours will be red. When you turn profitable, when you start making enough money, you can turn these into whatever color you like. So, just know, an up candle, a bullish candle where the price is moving up, is represented by a green candle. Vice versa, for when price is moving down, a bearish candle is represented by a red candle, okay? Now what do these mean, okay? What do these represent? Basically, right? The way I like to think about it, the colored in part here, the candle body, that's the candle body, okay? Then you have your wicks. These are these protrusions, okay? Either side. The candle body is where the price opened and it closed during a certain period of time. So you have our time frame here, where it ranges all the way from seconds to minutes to different hours, weekly, monthly, and you have your yearly time frame. Right now we're in a 5 minute time frame. Now what does that mean? It means a single candlestick, right, took 5 minutes to form. Now what would be inside of that 5 minute candlestick? Well, you can just imagine it would be 5 1 minute candlesticks. And it'll be so on and so forth for all the different time frames, okay? You could imagine, what does an hourly candlestick have? Well, it would have 4 15-minute candlesticks. So on and so forth, okay? Touching back on our candlesticks, okay? You have your candle body. Okay, that's where price is finalized, okay? That's where it opened up and when it closed. The candle wicks, it'll show you how far price fluctuated during that period of time. It'll show you how far it went down and how far the price got pushed up before the price was settled, okay, it closed and moved on to the next candle. So, bullish candle, okay, where the price is moving up. Price opens up at the bottom, price then moves down to make a low, okay? It will show you how far price got pushed down by this wick, okay? That this wick will be generated, like so. It will show you how far price got pushed down. The price will then move up, okay? Again, this wick will show you how far the price got pushed up in that asset in that period of time, where at the end of that time frame it will be finalized and finally the candlestick will close right here at the top, okay? That is your candlestick. Moving on into a bearish candlestick, okay, a down candlestick. It is the same concept, right? Except the price opens up at the top, it moves up, it moves down and closes at the bottom. That is it. Simple, okay? So moving on to the charts, just take a quick example. We have our up candlesticks right here, okay? Take this one for example. Price opened up at the bottom here, okay? Price traveled down, showed you how far the price got pushed down, okay? Price got pushed up, shows you by this wick how far price traveled up, where the price finally closed right here. Moving on to our next candle, as you can see it opened in line on the bottom. Price then got pushed down, right? Price moved down, it moved up, closed at the top. Again, in line with our next candle, as you can see by my crosshair there. Price opened up at the bottom, traveled down, up, closed at the top. So on and so forth. I hope that's fairly straightforward. Take some down candles as an example. So, we have our bearish candle right here. Price opens at the top, okay, where it then travels up. Not down, it travels up first. Makes a low, travels down, and it closes on the bottom. Again, in line with my crosshair, moving on to the next candle, you can see where the candle opened up at the top. Price traveled up, that's how far price got pushed up to that point, represented by that wick, where the price then got pushed down all the way down here. Pushed back up, price closed. Okay, that was our 5 minute time frame. Okay, it opened up here, pushed up, pushed down during the 5 minutes, where it finally closed here. Moving on to the next candle, the same thing. Okay, price opened up here, moved up, it moved down, and finally closed. Okay, that is it. I hope that's fairly straightforward, okay? Don't want to drag it completely. So that is your candlesticks. Now, we also have a line chart. Quickly touch on the line chart, okay? How does it differ from the candlestick chart? Basically, the candlesticks represent where price opened and it closed, how far it moved up and down, okay? What the line chart does is it shows the exact thing, same thing, okay? It's the same chart as you can see. The only thing it will not show you is the wicks, okay? The line chart will only show you where the price opened and closed. Now, that can be useful in a number of instances, okay? We will touch on how to exactly use the line chart in later on videos. But as a beginner, I want you to take note of that as a beginner, I remember myself being a beginner, price could look fairly messy, okay? This could be very confusing at the start, fairly I don't know what to say. It could just be confusing, okay? Intimidating, you could say. And it could be very hard for a trader at the beginning to find out or bias or like it could be hard to find out where you're going for the day. Okay, like okay, where are we headed? Are we headed up? Are we headed down? Are we moving sideways? Like what's actually going on? Okay, if you're struggling, okay, and to find let's say find different confluences, okay, like what's actually going on. A line chart is just a simpler version of that. Okay, if this is all looking messy, as a beginner, I want you to focus on okay, like I still use this to this day myself after years of trading. If this is looking scary, this is looking messy, you're confused, okay, use your line charts, okay? They're there for you to use. If this looks simpler to you, okay, if this looks easier to figure out what's happening on the charts, then by all means use it, okay? So there's your line charts, okay, and there's your candlestick charts. Candlesticks represent how far the price moved up and down, and open and closed, while the line charts will only show you where the price opened and closed. Now, moving on to our different candle bodies, right? Just briefly going to touch on different types here. You could see well, we have a strong bullish candle and a strong bearish candle. Now, what do we mean by strong? Okay, this is where we have a fairly even-sized big body and fairly even wicks either side. You can see they're not too big, they're not too small, not crazy looking. Okay, these are strong candles. Okay, so if you see a couple of these green candles next to each other, all the fairly the same size with the same wicks. Okay, basically what that is it's representing strong price movement in that direction, okay? It's encouraging movement in that direction. So as you can see here, for example, okay? 1, 2, 3, 4. Or even here, 1, 2, 3, these three candles, that's 5 to 15 minutes, okay? We have big candles, okay? Now we'll take these three, okay? You have three candles right here, okay? 5 minutes each. You have 15 minutes of price action, okay? You can see for 15 minutes, okay, you have these fairly big bodies, fairly even wicks, okay? Strong price movement, okay? Again, it continued. Same here. Strong bodies, okay? Price moved up again. Kind of went sideways, okay? Had a little dip, not to worry. Moved up again. Had a little dip, moved up again, and moved up again. It's encouraging price continuation. And it's the same for our down candles, or bearish candles, as you can see here. Okay? 5, 10, 15, 20, 25, 30. 30 minutes, okay? 30 minutes not including this candle. Fairly big bodies, okay? Fairly even wicks. Okay? You have a strong price movement downwards for 30 minutes straight. So you can imagine the trading opportunities here on a 1 minute time frame. Okay? There'll be a lot of opportunities in here. So, those are our strong candle bodies, okay? Strong bullish candle, strong bearish candle. We also have weak candles, okay? Now these are quite the opposite, okay? You have big bodies or small bodies, but the key difference is we have these long wicks, okay? Now what does that indicate? What does that represent? What does that mean? Rejection, okay? Think of rejection. So we now know how a bearish candle opens and closes, okay? It opens at the top, doesn't it? Price then moves up. It moves down and it closes. So to encourage continuation, this candle body, right, would have to close somewhat like this. In order for the next candle to encourage continuation, it would have to be the same and the same, so on and so forth. Okay, it is not always perfect, but again, the basics. Okay, what this small body and long wick represent is rejection. So at some point the price opened up here, it made a high, a fairly small high. It then traveled all the way down here. Okay, so price pushing downwards was fairly strong. It then at some point it came across rejection where the price started getting pushed back up again. Meaning, okay, we don't want to go down. Okay, there's slight resistance here, we're pushing back up, and it closed. So that's what a weak candle represents. Okay, that's how it forms. The same with a bullish candles. Okay, we now know that the price opens up at the bottom. It made a little low, meaning okay, price moving downwards here is not as strong. It then made a high. So in order for this candle and the price action to encourage continuation of strong movement to the upside, you'd want to see a lot of these big bodied candles forming after this one. Okay, but at some point it came across rejection. Okay, so we made a fairly small low, showing us that okay, price movement to the downside. Okay, it's not strong here. We then made a big high, but at some point we came across rejection where the price started getting pushed down again. And that is a weak candle. What it could possibly represent, okay? We're working on possibilities here, okay, not certainties. Moving on to our doji candles, again, possible reversal, not always guaranteed, okay? Basically, small bodies, small wicks, long wicks, sorry. Okay, it could indicate a possible reversal. It shows uncertainty in the market. A lot of these could show up when the market's going sideways, okay? Where price is really uncertain in the way it's going to go. So just take some live examples here if I can find them of reversals. So here for example you have price moving up, okay, moved up, you get this doji candle, okay, downward close candle, after which you can see a price move down, okay. The overall direction, it is up, as you can see here. But as you can see here, price moved up, doji candle indicate a possible reversal, which we got. Okay, well, not a complete reversal, but we got this little retrace right here. Okay, again, moving on to our little retraces. Strong move down, represented by strong big bodies. Dojis, retrace up. Again, strong movement down for a period of time. Dojis, push up. Perfect example here of a little reversal. As you can see, price is moving down fairly strongly. You get doji, and we have a big push up, okay? Little doji here, downward movement, strong downward movement, doji, push up. Little dip down again, and a stronger push up. So you could, what I encourage you to do is hop on the charts, okay? And start to identify these areas, okay? Start becoming familiar with these, okay? You can see these dojis, okay? It's a recurrent instance, okay? Look, doji, little reversal, doji, reversal, doji, reversal. Like this is a 5-minute time frame, so you can imagine how this looks like on a 1-minute time frame, okay? What's this? 21st of April. Let's see if we can actually find that there. Here we go. So on a 5-minute time frame, okay, you got your doji. So here's your little retrace reversal, okay? A much bigger movement, okay, because we're on a 1-minute time frame now. So there you have your strong bodies, your weak bodies, your dojis, okay, what they represent, how they move. So that is pretty much the basics of trading, okay? Fairly basic breakdown of what it is, okay, how you can capitalize on movements, what the charts are, okay, what they represent, okay, they represent price action, the way price moves in a certain asset, okay, over a certain period of time. You have your candlestick charts represented like so. We now know how a singular candlestick forms, okay. We now know that an up candle is green, a down candle is red, okay, mine are black, don't worry about it. Mind your own business. We now know where the price opens, where the price closes, what the bodies represent, what the wicks represent, okay. We have our strong candle bodies, okay, they represent strong price movement. We have our dojis, and our weak candles, okay, which represent possible reversals, okay, retraces, reversals. We have the way the market moves, okay, moves up where it's bullish, okay. It then moves sideways for a period of time, okay. It's consolidating, it's neutral, okay, it's ranging, and you then get where the price moves down for a period of time, okay, where it's bearish. So there you go. That is a basic introduction to trading. Hopefully you learned something. Hopefully you learned how the markets move, how they're represented, okay? In the next video we'll touch on more in depth information on the markets and on price action, okay?